and welcome. It's another half hour of markets, insights, and analysis on Business Incorporated, live from Channels Television. Here's what's coming up on the program. Gabon bonds rebound as reduced debt, burden, cushions coup impact. And Kenya inflation eases for third month on slower food price growth. And Morocco's plans to import more wheat in the coming months. Hello and welcome to the program. I'm Will Ebong. Let's get started with the markets. First up, major equities in Africa, where markets were mixed at intraday. Nigeria's NGX, however, was flying high, 1.38% at intraday. We see it right on the screen there. Now hitting the 67,000 level at intraday. South Africa's NGX, JSE, however, was down slightly, though, 0.19%. Not a bad day, but it's good for the NGX. Now let's look at Egypt, where the EGX 30 was closed for the week on Thursday, but in green territory. We see Kenya closing yesterday's trading session in the red, reversing Wednesday's gains. Now let's look at what's moving and driving sentiment at the NGX, and we'll be speaking to Damilare Ojo, Head of Investment Research at Meristem Securities Limited. Good afternoon, Damilare. It's good to have you on the program.
Good afternoon. Thank you for having me.
Damilare, I was quite excited when I saw the NGX hitting the 67,000 level at intraday. Are we still at that level? And what's driving this at the moment?
Well, the market has slowed down a bit between midday trading and this very present time. But altogether, we are still seeing positive sentiment in the market. And you have a major large cap ticker, DANXM, which has gained so far today. So that's also one of the major reasons why the market is up. And then you have Airtel on the flip side, which is losing. So I guess it's a game of heavyweight takers today. But by the time market closes, we will know who wins.
Did see another very interesting thing at intraday. We saw Dangote and NASCON, probably on NASCON on full bid at intraday, where we had that pullback in yesterday's trading session. Can you tell us what's happening with NASCON right at this moment?
Well, I think that yesterday's sell-off on NASCON and Down Sugar is just because of an immediate reaction to the news. I mean, the development from the companies that there's going to be the conversion of 12 units of NASCON for 11 units of Down Sugar, which is further to the restructuring that they are doing, which is a merger between the two companies and a third entity, Dangote Rice Limited. So yesterday's sell-off was just an immediate market reaction where market participants have not had enough time to assimilate the full extent of the information. So today, I think the market is assessing the information as being positive. That's why we are seeing, bagging on those tickers again today now. So both of them have gained about 10% so far today, and I think that would be sustained for some time.
So what investors are probably wondering, everybody's wondering, how much? What do you think what's the listing price for Dangote Foods? Because this proposed merger is quite interesting with the numbers you just churned out. What do you think what should investors expect as the listing price?
Yes, rightly said. What a lot of people are interested in right now is what the listing price is going to be. And from different iterations, it appears that first is for NASCON shareholders to be put at a par level to be indifferent between taking the 12 units of NASCON, holding that, and exchanging it for 11 units of Down Sugar. It would mean that the share price of Down Sugar has to be around 61, above 61 naira. And I think that would be much of the compensation for NASCON shareholders for having them to exchange their shares for Dangote Sugar's shares. And even for Dangote Sugar's shareholders as well, the dilution that will come with the proposed merger upon completion of the merger would also mean that they would also suffer some loss. But the company has to, the listing of the new entity, Dangote Foods, has to come at some premium to the current price so as to leave them as well at an advantage. So I think the listing price is going to be somewhat between 60 to 70 naira, because you also need to balance given a listing price that is attractive to investors and ensuring that the the share price is not too high for new entrants, to come on board at the end of the day. So I think it will be somewhere between 60 to 70 naira. But again, a lot also depends on what is going to happen going forward in terms of whether there's going to be share bonus after this exchange.
Because people are wondering to know right now, will I make a loss? Will I make a gain if I enter NASCON, if I enter Dangote Sugar? What's in it for me? And people are a bit very, very skeptic at the moment, but treading with caution. We're seeing that caution, and then we're seeing that the questions that they ask, and we're just hoping that it pans out well for everyone at the end of the day. Thank you so much, Damilare Ojo, Head of Investment Research, Meristem Securities Limited. Thank you so much for joining us on Business Incorporated.
Thank you for having me.
Now we'll go over to the Middle East, where most major equities were closed on Thursday, except for the UAE, where it was trading mixed. At intraday, we see Abu Dhabi down 0.14%. Dubai, however, was up 0.01% as marginal, close to the flat line. Now, elsewhere, Saudi and the Qatari indexes closed yesterday in the red. Both segments were down in yesterday's trading session. Now, let's go over to where Russia, talking about Russia right now, oil is one of the biggest issues, the world's biggest producer of oil, but it is currently facing a fuel crunch, a series of problems, including a weak ruble mounting, and that's now leading traders to ask if there's enough fuel to go around. For more, we're joined by Deutsche Welle's Cassandra Sant. Cassandra, who's being affected by this fuel crunch that we're seeing now?
Thanks for having me, Will. Well, the biggest concern right now for fuel shortages is in the southern part of Russia. That's the breadbasket of the country. And that's because it's harvest season there, and that means big harvesting machinery, which need diesel and other kinds of heavy gasoline. Traders are saying that in those southern parts of the country, regional oil product depots are cutting or even suspending fuel sales, and some retail filling stations are limiting fuel sale volumes to customers. Now, Russia is a massive oil producer, so it's surprising to many that the country is being hit by shortages in the domestic market. The problem here, according to market sources, are really multifaceted. There's been maintenance at oil refineries, which have slowed down production, and there have also been infrastructure bottlenecks on highways. Now, Russia has tried to tackle diesel and gasoline shortages in recent months, even while officials deny that a fuel shortage exists. This is a sensitive topic for the Kremlin due to the war in Ukraine and a presidential election coming up in March. Now, Russia has even started talking about export curbs to help enable a stable supply on the domestic market and increasing levels of mandatory sales on exchanges.
So we've mentioned a weak ruble, Cassandra. How bad is the situation now?
So the low value of the ruble is a big part of the fuel story here. At the end of the business day yesterday, the ruble was trading at about 96 rubles to the dollar, and that's stabilizing. That shows some stabilization after a bit of a rocky month. It's important to note here that the value of the ruble has really been on a roller coaster due to the war and Western sanctions over the last year and a half or so. But it's safe to say that looking back on all that the value has definitely dropped since the full-scale invasion of Ukraine, which means it costs Russians more to buy things priced in euros or dollars. Because of the weak ruble, exporters have to export more oil products to earn as much value as they did previously, and that would be before the war. And fossil fuels are a big part of what keeps the Russian economy moving. And the Kremlin's coffers, of course, full of rubles, tax money. To counter some of this weakening in their currency, Russia has been talking to the members of OPEC Plus about decreasing oil supplies. The hope there, from the Russian side anyway, is that less global production will increase the value of oil, and for Russia, that would help balance out the fact that their currency is worth a little bit less. That plan is expected to come out next week.
We did see that GDP growth for Russia's economy in July. But meanwhile, on the markets, what are traders looking out for today?
Well, European shares are struggling for direction so far today as support for energy and mining stocks were offset by weak performances in German copper producer Arubis following a profit warning from that company and for Volkswagen after a brokerage downgrade. Those Arubis stocks slumped 18%. The German DAX fell slightly as a result. The broader mining sector, however, gained 0.7% after tracking a rally in most base metal prices. Now, on the opening bell, the FTSE 100 index rose 0.2%, while the Paris CAC 40 shed 0.2%.
Thanks so much, Cassandra, for those insights. Now we go over to the U.S., where stock futures were higher on Friday as investors came off a mixed trading session and closed out the month that saw losses for all three stock indexes. Futures tied to the Dow Jones Industrial Average added a 0.36%. S&P futures rose 0.33%, while the Nasdaq 100 futures inched up by 0.16%. Now let's check out how yesterday's activity went with Maria Bird.
Mixed on Thursday, as there were hopes that August would end on a high note. But the Dow Jones was down by 0.48%, losing 168 points. The S&P 500 was also down at 0.2%, and the heavy tech Nasdaq was only up by 0.1%. There were many hopes that August would end in an upward swing and that there would be a 5-day winning streak, as most of the day on Thursday was on a high note and most indices were in the green. But to end the day, it just could not sustain for all three indices. Investors are also watching to see how the jobs will come out on Friday, as it's very clear that this will have a major indicator on how the next quarter will run. Many investors are also watching to see how the U.S. will end up in fare before the end of the year and if interest rate hikes will be on the rise in the weeks and days ahead.
Thanks, Maria. Now let's look at markets in Asia now, where stocks closed mixed in the region. Japan's Nikkei 225 closed trade up 0.28%. In mainland China, the Shanghai was also up 0.43%, while the Hong Kong stock market were closed as Hong Kong braces for the super typhoon Solar. The Kospi in Korea, however, was in the green, while Australia's index finished in the red. Now, housing still remains a major challenge in Nigeria, and recent data shows the country has an estimated 28 million deficit as of 2023. That's according to real estate expert and managing director of Landway Investment Limited, Shola Bello. She spoke to Channels Television in an interview. Let's take a listen.
Huge problem, and I know that the government is doing something actively to try to meet the demands of housing in the state. However, I don't think that it's something that one entity alone can solve. It requires a collective and collaborative effort. With regards to the government, I think the best they can do is to continue to provide an enabling environment for real estate development, even for landowners who are willing to give up their lands for development as well, providing infrastructure to communities that are yet to be untapped, and ensuring that the growth for the entire population of Lagos is spreading across the different sectors. So you find that the concentration is particularly quite large around the cities. But then there are also suburbs, right? And there are also some areas within the suburbs that are still yet untapped. People are beginning to go to the outskirts of Lagos, to build. And that's because of the demand. And then also finding ways to provide incentive for real estate developers, because a lot of them are taking on the burden of providing housing for, the residents of Lagos. So if the government can support, by providing incentives for the developers to enable them to continue to grow their business, that would also help with solving the problem. But I don't think that it's something that the government can do alone. It has to, be collaborative. So the public, the private sector have to work together to solve the issue.
Yeah, right there, public-private sector collaboration for solving housing issues in Nigeria. Next, a look at South Africa's expected GDP growth. Stay tuned. This is Business Incorporated. Thanks for staying with us. Now we go over to South Africa, where the Statistics Bureau is set to release the GDP data for the second quarter of 2023. The data is expected next Tuesday, September the 5th. But ahead of that, Matt Kindiger, practice leader, Sub-Saharan Africa Frontier View, joins us to share his expectations for the country's economy. Good afternoon, Matt. It's good to have you.
Hi, good afternoon. Thanks for having me on the show today.
Matt, we're talking South Africa mostly all the time. What are you expecting from the country's GDP release on Tuesday next week?
So the most important thing is whether South Africa will avoid a contraction. So it is possible that South Africa's economy will fall into recession at some point this year. The big question is, will that be the second quarter or will it be the third quarter? Our view is probably more likely the third quarter. In terms of the second quarter data that we're expecting, growth of 0.1%, 0.2% will be a good day for South Africa. But what we're likely to see is continued divergence between different sectors of the economy. What we have seen in recent years, despite overall stagnation, or recent quarters, is despite stagnation of the South Africa's economy, the economy grew 0.2% year on year in the first quarter this year. There has been very significant divergence between services industries that have done a lot better and heavy industries that have done a lot worse. So continued contractions, for example, in the mining industry, manufacturing, but financial services, ICT doing a lot better. So we're probably going to see a continuation of this trend, but we did see a 1.5% year-on-year contraction in retail sales in May. So that does suggest that even services industries are starting to struggle a little bit. On the other hand, load shedding, power shortages in South Africa in the beginning of the winter, sort of at the end of Q2, were actually relatively not too bad. And so there could be a little bit of a reprieve for the South African economy. So it could go either way, but at best case scenario, we're probably going to see 0.2, 0.3% growth for Q2.
I know that South Africa just had the BRICS summit and there's been some euphoria from it, especially with the issuance of the local currency bonds. But how do you expect the economy in South Africa to perform for the rest of the year? Bouncing off of that.
Yeah, the BRICS conference will have a moderate impact on South Africa, if anything. What's much more important in terms of what will be determining the country's growth outlook over the next 6 months or so, or into 2024, will be the effect of rising interest rates. So interest rates are now at a 15-year high. They haven't been this high since the end of the financial crisis in 2008. And we are beginning to see the effects of very high interest rates on credit growth. So credit in South Africa, especially to corporations, has shrunk for the first time since 2020 over the last couple of months. And so this really does suggest that businesses are withholding borrowing because of the cost of servicing debt. We also will see what the effects of continued load shedding will be. Our base case view is that power shortages will get worse before they get better in South Africa, and this will have a continued negative effect on manufacturing and also on sentiment and operational costs in South Africa. So our view is that the economy will probably muster, on average, 0.1% growth year on year this year. Maybe an upside scenario is closer to 0.5% growth. So relatively muted expectations for the next 3 to 4 months.
So how will the Rand perform over the coming months? What do you see?
Yeah, so the Rand will continue to exhibit quite significant volatility in our view. So the Rand touched a record low against the dollar in May. We expect it to reach another record low against the dollar. So it probably will touch 20, maybe a bit more than that, by the end of this year. And this will be driven by the economy's continued slowdown, concerns around load shedding, also investor anxiety as we get closer to the May 2024 election. So certainly a lot of uncertainty around what the policy direction of the new government will be after the May 2024 election. Having said that, South Africa's, the Rand does respond to global investor sentiment. So when there's positive global economic data, the Rand generally appreciates. We also expect the South African Reserve Bank to raise interest rates if the Rand does lose quite a lot of value. So this will, allow the Rand to regain some ground. However, overall, the main takeaway is more depreciation and continued volatility of the currency, especially as we head towards the May 2024 election.
We'll look forward to that and keep tracking it, Matt. Thank you so much, Matt Kindiger, practice leader, Sub-Saharan Africa Frontier View, for joining us on Business Incorporated.
Thanks very much.
Meanwhile, Kenya's inflation slowed in the month of August, helped by a month-on-month fall in food prices, according to data from the Kenya National Bureau of Statistics. The data showed the inflation was at 6.7% year-on-year in August from 7.3% in July, remaining within the government's preferred band of between 2.5 and 7.5%. The Statistics Office says the food and non-alcoholic beverages index, which contributed to the drop, fell by 0.5% in August from a month earlier. Now, earlier this month, the central bank had held its benchmark lending rate at 10.5%, citing falling inflation. We go to Gabon now, where the dollar bonds have rebounded from a two-day slump as the country's lowered debt servicing burden helped to calm investors following this week's military coup. Debt due in 2025 rallied 1.8 cents on the dollar, trimming a 9-cent sell-off for the biggest advance in emerging markets on Friday, while the bond maturing in 2031 added 0.4 cents. Also, indicative data from JP Morgan shows the country's sovereign risk premium was easing after jumping 265 basis points in the past 2 days. Now, the Central African nation's debt securities plunged after the military deposed President Ali Bongo in sub-Saharan Africa's 9th coup in 3 years. Now, Morocco's Grain and Cereals Traders Federation says the country expects to import 2.5 million tons of soft wheat by September, but will need another 2.5 million tons to end of June 2024, following a below-average domestic crop and high global prices. Morocco has extended import subsidies for all wheat from July to September, regardless of origin, to encourage importers. According to the Industrial Millers Federation, about 5% of Morocco's wheat imports are now from Russia, and 2 ships are already on their way to Morocco from Russia, loaded with 100,000 tons of wheat. And that's a wrap on Business Incorporated. Thanks for watching. The final edition for this week. Do join us next week for another edition. I am Will Ebong. Thanks for watching.